The stock was a top Nifty gainer, 3% gains coming in there. HUL, after the sale of its business, Pureit business, that was witnessing brisk buying. BPCL, Tata Consumer, Airtel were some of the other gainers. On the flip side, Shriram Finance has been in a spot of bother for the last few sessions, today as well. Among the laggards, Dr. Reddy's, Kotak Bank, UltraTech Cement and NTPC. But Yatin, some of these mid-cap pharma names are doing well today from the broader end of the markets.
Absolutely, and a lot of stocks to talk on, starting with Natco Pharma, that stock moved 6%. Alembic Pharma, that stock also moved 10% in trade. Century Textiles, mind you, moved 6% after the quarterly numbers, and the real estate sales have clearly made the momentum for the stock as well as the earnings for the company. Chennai Petro 12% higher in trade, and in general, if you look at stocks like LIC of India, that stock crossed 1100 and clearly strong momentum building up as far as that counter is concerned. Market cap nearly 7 lakh crores for this state insurer. Sobha Developers, IRB, Motilal Oswal Financial Services, Suntech Realty, Poonawalla, all of these stocks also doing well in trade. What was not doing well is the rise of Jupiter Wagons post the QIP completion. Some bit of profit taking, 6% down for that one. Zomato, cracked nearly 5% in trade. MMTC, IDBI were the other stocks which were low by nearly 4% in trade today.
That's true. I think Zomato, hit a fresh high yesterday and today came under some bit of profit taking. But let's take a look at the stocks that are on our radar. On that note, Yatin, Bajaj Auto reported good set of numbers. That stock was in focus. Margins and revenues have both topped estimates. Net profit was also up 19.5%, slightly better than expectations. If you look at the realizations, those were also up 8% on a YY basis at 1.1 lakh, and volume growth in fact was at 7% on expected lines. But margin growth was led by, or margin expansion was led by better realizations, cost reduction, which more than offset the drag from the electric two-wheeler segment. If you look at what the analysts have to say about this, is that the company can maintain 20% kind of margins on the back of good product mix, and in the coming quarters, of course, as I mentioned, the product mix is fairly superior. So that would aid in margin expansion as well. In terms of the management commentary, that's been also pretty upbeat, right? They've said that exports saw double-digit growth on a YY basis, and South America has accounted for the highest contribution towards exports. Pulsar's premiumization led to sustained double-digit growth trajectory. It saw 3 times growth over industry standards in the sports motorcycles. Triumph, that has clocked sales worth 1,200 crore rupees since its launch, with exports to as many as 50 nations. And of course, the company has also declared a balance sheet position with 16,700 crore rupees as cash on books. I think this bodes well because it supplies future fuel for growth, right? And the company has already done a buyback worth 4,000 crore rupees in March. And of course, Rajiv Bajaj has always maintained that they believe in giving back to the shareholders, which they did back in March. But it has also recently launched the world's first CNG bike. And Yatin, it is only available in select cities, so to say, Mumbai, Gujarat and the likes. And the waiting period is quite long. 20 to 30 days to 45 days to even 3 months. So how the company really scales up this CNG production is something that could be a key trigger going forward. But Yatin, this stock has been the 5th best performer on the Nifty on a YTD basis. So the next trigger will of course be as to how much it can really scale up the CNG bike production and how much of an opportunity it really turns out to be, because the demand for it is pretty buoyant. I was just reading some reports, and it is in high demand.
Yeah, high demand because probably you save too much on fuel. Probably the economics really works for the motorcycle owner. But Bajaj Auto, clearly a strong performing stock. But what is also doing well is Bharti Hexacom, and since the listing we have seen strong moves come in for the stock. Now JP Morgan today has initiated coverage on Bharti Hexacom with a buy rating. Target is 1280, and this overweight call which is coming from JP Morgan is largely due to the market repair cycle which the telecom business is going. Market repair means that the tariff hikes recently clearly helps the market matrix move better, and the returns also for telecom companies should improve, given the fact that a lot of companies like Bharti Hexacom, Vodafone, Bharti, Jio have invested heavily in the 5G network expansion, and probably this kind of tariff hike should be able to help them recover costs very, very short. in a short span. Now the company is only 2% below Bharti average revenue per user, and with tariff hikes probably this ARPU should improve according to JP Morgan. In fact, expecting a 15% hike in each FY25, which has already happened, and one more in FY26 would mean that it will drive the EBITDA CAGR of nearly 21% till FY27. So yes, on the back of strong earnings, good growth, and probably with telecom tariff hikes, one round being done, another being expected by analysts, this is one stock to watch out for.
Of course, telecom pack clearly buzzing, post that price hike, and of course Vodafone also, given the fact that it has recently raised funds as well. But the other stock that was buzzing and was in fact the top Nifty gainer was Coal India. There's been a positive brokerage report, and on the back of that, the stock was actually up somewhere around 4 to 5% at one point in time, although shut shop somewhere around 3% higher in today's session. Phillip Capital has initiated coverage on the stock with the target price of 611 rupees. This is the only brokerage that has a target in excess of 600 rupees on the stock, which implies a 23% upside from yesterday's close price. Now, Phillip Capital maintains that India's coal requirement is likely to jump by 400 to 450 million tons in the next 6 to 7 years, and the company will meet the bulk of this need. And volumes for Coal India may grow at a CAGR of high single digit to low double digits, which will strengthen its balance sheet as well. The dividend yields will be supportive as the cash generation will be lesser than the cash burn. Although it has said that the EBITDA per ton may moderate to 500 rupees vis-a-vis 555 rupees, but it may remain below the pre-COVID, or in fact, it may remain higher than, I beg your pardon, the pre-COVID level. International coal prices have also bottomed out, and that will aid blended realizations for the company going forward. And volumes are expected to grow at a CAGR of 8% over the next 3 years. FY25 capex has been pegged at 20,000 crore rupees, but still the cash burn is likely to be lower than the annual cash generation. In fact, Phillip Capital has also pointed out that the net cash per share is likely to increase to 69 rupees by FY26 from 44 rupees in FY24, and higher dividends are likely to continue due to the healthy cash generation as well. Of course, there are risks going forward, like fall in international coal prices that will impact the e-auction premium, delays in consumption as well as ramp up of capabilities. But if you look at the stock price, Yatin, in the last 1 year, it has doubled, and PSU rally, we've all seen, it has been a dream run, and it still continues given the fact that we saw a near 3% uptick coming in on Coal India today.
Absolutely. Coal India and Phillip Capital are expecting that in FY26 the cash per share will increase to nearly 70 rupees, 16 and 70 rupees. And as Nandita was mentioning, clearly one of the best performing large cap PSU stocks, doubling in the last 6-12 months.
Well then, Yatin, those were all the stocks on our radar this afternoon, and I can see that you can't wait to start your mid-week break that you have. Tomorrow is a market holiday, of course. We've left the market in fine fettle, no big gains, but we've ended above that 24,600 mark, which by the way was being pegged as a very crucial level. A close above that level was being seen as a precursor to 24,800 or thereabouts. So let's see whether we can achieve those levels this week, when we resume on Thursday. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned. Have a good midweek break and come back and join us on Thursday morning. Thanks a lot.